Good morning, everybody. My name is John Klotz. Welcome to Rapid Fire, where we have our friend Rana Chauhan, Chief Investment Strategist at Counsel Portfolios. Welcome aboard, Rana. Always great to have you here.
Thank you, John.
I appreciate you coming in. I'll just give a brief bio about Rana. He has a very interesting resume. Started out working as a oncologist early in his life and found the truth in being a portfolio manager. Lots of insights, and I want to talk to him today. We've got 15 minutes, and we're timing it as of right this second. We are going to talk about everything that's going on in the economy. So Ronnie, you got 15 minutes. Let's keep our listeners engaged, and I'll give you a 2-minute heads up, and got 2 minutes left, and you can summarize anything. So let's go. Let's talk about the COVID economy and what's going on.
Okay, COVID is where the vaccine is being worked on. We got lots of progression. First time the world's ever come together to try to solve one thing. But the world's too focused on the vaccine. Actually, what's more important than the vaccine is what is called therapeutics. And what they do is help with the symptoms. So the fact is that there are therapeutics out there already. So actually, I think we're kind of beating this animal now, but COVID will be with us for the rest of our lives. It'll just be more manageable.
Yeah. So where are we with this vaccine? I mean, we're hearing a lot about it, and certainly, you know. Now I want to ask you something. By the way, I want to make sure this thing is recording. Okay, there it is. Yeah, so where are we with this? I mean, are we months away? Are we a year or two away? Where are we, and how's that going to impact the economy if we can resolve this whole situation?
Okay, so the quickest vaccine that will be out there is probably around about the end of October. That's done by Moderna. All right,
Yeah.
that'll be in it, but it won't be in public hands. It's going to go to medical professionals first. Okay, so we're probably looking at fully fledged vaccine in people's hands somewhere at the early part of 2021. But like I said, vaccines actually don't matter as much. Okay, more important is the therapeutics and us being able to manage through this. Okay,
Yeah.
So it's a bit of an illusion, the vaccine itself is. We do need it, but our DNAs are so different that some people will take to it, some people won't.
Absolutely. So as investment advisors, we've seen this has very seriously impacted the global economy. More than anything, possibly even since like World War II. Like the world literally shut down economically. And what's this meant to us?
It's meant just like World War II. Each one of the world wars, there was a fundamental change before the World War to after the World War.
Yeah.
All right. So this has also made a fundamental change from before COVID to after COVID. We're now changing the ways that we live our lives, and we've moved from this world of analog to digital to it. And it's a permanent change as well. All right. We're going to be more used to watching Netflixes of the world and doing things like that, ordering things from Amazon that we were never doing before.
So interesting. So let's talk about things have changed. There's a global shift towards sort of, well, let's talk about how everyone's working. We're all working from home now, and we're relying on things like Amazon. We're not spending like we used to spend. But what's really changed, and how is this impacting the investment world?
Well, it's again that analog versus digital. So if you think about us staying at home, that means we're not driving our cars as much. That means oil isn't being used as much. So if oil isn't used as much, that keeps the price of oil lower because the demand is less, even though the supply is the same. So when oil is lower, it actually makes inflation itself lower.
Yeah.
So that tells you that interest rates are going to be low for quite a while because of our fundamental shift that's happening.
Yeah.
Also, technology is helping with that as well.
Now, you made a prediction when I spoke to you last, and you suggested we did an interview with you back in June. You said the summer was going to be very strong for the stock market. And you were correct. It was very strong. But now we're all talking about the US election. We've got sort of this bitter rivalry between the Republicans and the Democrats. What's your spin? Well, how's that going to play out for your typical investor out there?
First, John, the thing I said in June, that's just a guess. Okay, I have no ability.
Not you, no.
I have no ability to predict anything at all. Okay, all I do is look for the truths and the fact and try to stay away from opinions. Okay, so this is what
I think that's great. So boil all the nonsense away and just talk fact.
So the facts are that there is an election on November 3rd. That is a fact. There's no way around it. Also, the fact after that is there will be either a new administration or the old administration coming back in, and they will make changes or do whatever they want after that. But before that, the fact is that the media is going to be all over this election.
Yeah.
And that's what's going to cause the volatility just before it happens. And then magically, poof, it goes away once the election's over with, and they either celebrate or they commiserate. But the good other fact is that just because of the election, it doesn't change the way we do things. You will still be doing the normal things that you were doing before the election as you were doing after the election. Okay, you're still going to be watching the Netflixes of the world, still going to be eating the same food, same things. And that's what we got to remember. But
is there the impression that as the election comes to a close and as we sort of are able to handle COVID, either therapeutics or vaccinations, that there's the continued opening of the economy is inevitable, and that is just going to create growth in itself? Is that kind of where you're going with this to an extent?
I'm actually going to the comparisons. So in the financial world, they always compare something this year against something last year.
Yeah.
So we've had a terrible Q1, let's call it quarter one.
Sure.
So next quarter one, even with slight improvements, is going to look vastly greater than 2020 Q1.
Right.
That change in just that little change in that the actual numbers is going to give people more confidence in the market. So it's always about comparables.
This is true, and talking about, let's talk about where the opportunities in the market are going to take place. Like I know you mentioned some of the things you were talking about, obviously the technology stocks, and you also expressed sort of resolve that you felt the banking sector was in for a better awakening in 2021. Maybe you could just expand on that.
So the banking system has a lot of problems right now, and that's because interest rates are low. And that means that they can't lend out at a high rate. And people that are remortgaging their houses or getting mortgages now are getting at a lower rate than what they were a year, 2 years ago. So that's going to hurt the bank's bottom lines. But banks have the ability to change that by increasing client fees.
Yeah.
Okay, so you're going to start to see your fees kind of go up on everything because the banks are hurting. And you're also going to see a change in the banking structure. We need not as many branches anymore because they need to free themselves up from the real estate costs.
Right.
You have one mega branch in a city. That's how they'll.
That's amazing.
Okay, so you're going to see that. So the bank is in for a struggle. But as you go further out, all right, as you go into 21, 22, the banks will be used to this lower rate. And then that comparison comes in again to the previous years, and all of a sudden you're going to start to see the banking sector move again. But you're out at least a year to 2 years based on the facts of what would happen with their balance sheets.
What do you think? Now? Obviously, there was a lot of talk before COVID about China, and what's your spin on that? Where do you think that's going?
Well, first of all, I don't think about we should blame anybody. It's happened. There's no use in saying, hey, you did it, you did it, you did it.
Right.
The fact is, it's here now. So how do we tackle it? Okay, that's what it is. But the distrust of China has increased now. Let's put it this way. So you're going to see supply chains leave China and have alternative supply chains in Vietnam and India. In fact, Apple's already opened up an Apple iPhone manufacturing in India.
Right.
This really hurts China a lot.
Yeah.
Because if Apple does it, other companies will start to do it. And the only advantage China got is cost. So they will have to cut their costs to attract them to come back again, which affects their GDP even more. Also, we don't have a lot of trust factor with the Chinese numbers. There's just not enough trust on what is your
Yeah.
real GDP. So the world's about to go into a distrust of China phase, which hurts China, but it really helps the US.
So I mean, is your feeling that the big opportunities are in the U.S. Moving forward, especially from an investment standpoint?
No, there's also going to be other areas, subsidiary areas like Taiwan,
Yeah.
India, Vietnam. Those are
Emerging
also
markets.
good, okay? But not in Europe. So if we look around brand name companies around the world, if
Yep.
I ask you for a medical company, you're most likely going to say Pfizer or Merck, American companies. If I
Yep.
ask you for a retailer, most likely you're going to say Amazon or Walmart. That's an American company.
Yep.
So when you look around the world, most likely you're going to name an American company. That's how much that company is in the rest of the world. So yes,
No, that's fair enough. What
it has
about
an
little Canada here? 2% of the world market. Where's our opportunities?
our opportunities are very, very limited right now
Yeah.
because we don't really have a technological hub. We used to have, and our government is not setting up business centers to encourage that. Our
Yeah.
taxes are higher. So there's a kind of a disincentive to go to Canada. But what we do have is a lot of safer utility companies. And we're known around the world as the more conservative Americans. So
Yeah.
think about Americans, and we're the more conservative. So there is, but if I go around when I go around the world and I say Canada, name me a company in Canada, they can't name a Canadian
No, I
company.
know. I know. I know.
So that's where
Everyone
we
thinks Canadian Tire is a big company, and it is if you live in Barrie,
right. But
but
around the
it's a
world, they don't
pimple.
know what Canadian Tire is.
Yeah,
Okay.
no, I hear you. I hear you. So what about and there's let's talk a little bit about some of the things that are going on in the retail and real estate. I mean, those are sort of the sore spots. You and I have discussed in the past. The idea that real estate is commercial real estate has been severely impacted by the fact that we're all working from home. A lot of companies are looking at reducing their space. What's your spin on that?
It is, like I told you, there's a fundamental permanent shift going on. All companies are now going to look at reducing their costs. And one of the biggest costs is rent space.
Yeah.
So they will take that rent space, halve it, and then tell people to work from home as long as productivity stays the same. So this is a permanent impairment to office real estate.
Yeah.
Now, the side effect of that is that people who live downtown, all the condominiums and all that stuff, well, banks and companies downtown will have to lay off to try and keep their margins. So that's going to affect the condominium market downtown or near there. And also, because we're working from home, we can work from anywhere. So you can work from Barrie if you want, or somewhere else, Nobleton, wherever, and you don't have to be downtown anymore. So that makes real estate other places more attractive than the real estate downtown.
So we got 2 minutes left. What are investors to do to moving forward? Give them, maybe you can sum it up,
Okay,
and then
first of all, I would
let's
say
wrap it up.
don't get caught up in this market. Do not change your financial plan because something is going up ahead. Do not get lulled into, hey, this is an easy game. I can just buy a stock and run the way. That's when trouble happens. The most important thing to do is to have that plan and stick to it, irrespective of what's happening and how much inducement you get, or the silver object, the shiny object that says do that. Planning does make a difference.
Because there's a lot of distraction out there. Yeah, we call it the financial pornography. So at the end of the day, basically, how are investors? Are they to find a financial advisor? Are they to do this on their own? Where would you go with all this?
I would say it's like talking to a doctor. You talk to many, all right, and you find the one that fits you the best. And it's also time tested as well. The problem that we're having is a lot of new advisors coming that have not gone through a bear market.
Tell me about it.
And that's what worries me. They do not know what a 50% drop looks like. Okay.
Ouch.
And it isn't good. And
I
that's
do.
what you need to do. You buy experience, just like you buy a surgeon's experience.
Absolutely. Okay, so we got 30 seconds left, 23 actually. Any sort of closing comments before we let
Yeah.
our friends and audience go on about their day?
My basic saying is stay rational in an irrational world.
That is a great piece of advice. And I truly appreciate you coming in, Rana. And the buzzer's about to go off. There it is. That's our 15 minutes, Rana. Great having you on Rapid Fire, and to be continued. And let's look forward to that next election.
Great.
Thank you, sir.